Welcome to the Rachel and Cassandra Show. Before we begin, our disclaimer. What you are about to hear is not even close to legal or financial advice, even though it might sound like it.
Okay, it's condos, Rachel. We're talking about condos.
Are we recording yet? Okay, perfect. Then we'll just call that the intro and roll forward. Welcome to the condos/glasses episode. I couldn't not. Hi, everybody. Oh boy, this topic of condos in Michigan is always unique because here in Michigan we have something called site condos, which I don't know.
Not a real condo.
Not a real condo. No.
Not a real condo.
And that's not really what we're here to talk about, but it bears covering. Do we do it before or after we get into?
Let's get it out of the way. A condo is not a condominium. A site condominium is not a condominium, but it does go on a condominium appraisal form.
So let me just back up and say that there are condos, which is what people think of as condos, condominiums. And then in Michigan, we have a way of divvying up land that allows for subdivisions while not violating the Michigan Land Division Act of, I think it's 1984, but I could be wrong on the year. But there's a Land Division Act governing how properties can be split. And a site condo is a platted sub, which allows you to have 30 houses on 0.18 acre parcels all jammied up. And it's a specific way of splitting up property. It is not a condo in the sense of a condominium. Go, Cassandra. Right. What year is it?
So it was the Land Division Act of 1967. It's been amended since, but that's
67. How the fuck did I get 84?
I don't know. Duh. Good years, I suppose. But other states might call them PUDs or planned unit developments.
Yes.
It's basically a plat. It's a fucking plat. It's going to be called a site condominium.
You know what it is? A reference to a prior episode when we were talking about the client who bought the piece of property in a neighborhood there was no road. It exists on a drawing. It's a drawing of a way to split up properties. And there are legal descriptions behind it, but it's always part of the whole of the property only. Anyway.
Yes. And most people would know it as like an Allen Edwin type development community, right? A big builder's going to come in with a piece of land and they're going to put in 70 houses. That is usually typically a site condominium development. There's going to be private roads usually.
Yep.
There's a private road agreement. There's usually
HOA.
A super cheap HOA. Sometimes there are or are not facilities, whether there's a pool or a splash pad. It just depends on the community, but it's called a site condominium. The appraisal would go on a condominium form, but it is not a condominium and does not require traditional condominium underwriting.
And that's a wrap. Thank you.
There we go. Done with site condos. See you later.
No, but wait, there's more.
More.
What is a condo? And I particularly want to make sure we talk about financing condos compared to houses and some of the additional hurdles. I'm dealing with one right now. And it's important. These are things that are important for buyers and sellers to know. So from a lender perspective, Cassandra, if I am out with a buyer and they have a budget of $375,000 for a house, and we're shopping in an area, and the values of the taxes generally, we've got, estimates for these things. And then they find this condo, and it's a true condo. Let's say it's a split condo. Like those are really popular right now, where you're only sharing one wall, but it's still a true condo. And they want to write an offer on that, and it's $375,000. Are they going to be able to buy that condo, Cassandra?
Maybe.
What would impact whether or not they can buy that condo?
They would probably, if $375,000 was their maximum.
Yes.
That translates to about a $300,000 condo purchase because there's an HOA due.
And
the
true
HOA
condos
fees
have significant HOA dues.
Yes. The benefit is you don't have a garbage bill or a water bill or a cable bill. You don't have to pay
And
somebody to mow or
she's
clean out your gutters.
super important
But
that I tell you that she is suggesting some of the most common things that are included in those dues.
yes,
Always check your own association bylaws
yeah,
because not every HOA covers all the things she just said.
yeah. Generally speaking, the cost of the HOA, Homeowners Association monthly dues, are part of that total housing monthly payment. So
Impacts your debt to income ratio and the percentage that is allowed to count towards your housing, right?
yes, generally speaking, a $375,000 house payment is going to be on par with a $300,000 condo payment because you're financing less on the condo, but what's taking that space is the HOA payment, which is not present in a single family house. So
Right.
typically people can afford less condo than they can for house.
And when she means less dollars, not necessarily
Yes,
less living, less house, less whatever. Some other
less
trade-offs
dollars.
that interesting ways to think about condos because people may not realize in a condo scenario, you only really own the drywall in. Like generally, like as a rule of thumb, it's from, I know, and I saw that gesture, but generally ways to think about it. Your ownership doesn't include the property. It's not your house. You can't put on a new roof if you want to. You can't put pink siding. You don't own that part of the property. That is owned by the association, the development, the community that the condo is in. Go ahead.
And all I was going to say, I wasn't going to disagree with you. I was just going to say, and that is the reason the homeowner's insurance policy is dirt
Yeah.
cheap on a condo because
Yep.
it's literally called walls in coverage.
Yes.
You do not have to insure the roof
Nope.
or anybody breaking their leg on your property outside.
So
right? So it's generally super cheap.
In a catastrophic loss conversation, your condo burns to the ground, your insurance company is only responsible for the drywall in, and the association's policy covers the exterior of the building, which that policy is paid for in your dues, right? Also, your
Yes,
taxes are lower because you're not paying taxes on a hypothetical 2,800 square foot single family residence on a 0.2 acre parcel. You're paying taxes on a fraction of that.
a unit, but they're not that much cheaper.
Okay. Yes, we've discussed this.
They really, yeah. I
Okay.
mean, I guess whatever, but they really aren't that much different for property taxes. But I was going to say, because you were leading into it, so homeowners insurance is cheap on a condo because it's walls in, and then your HOA dues help cover the policy that covers the actual buildings. And if you think of, what is the name of that? The Champlain South Tower in Surfside, Florida last year.
Oh, yes. What
Do
a
you
great
remember?
reference.
Okay, the condo that fucking fell down, right?
Yep,
The condo that
collapsed.
fell down. So a lot of people died in that. A lot of insurance companies paid out. That catastrophic happening actually changed condo standards for everybody. It made it even more difficult
Lending
to get a
standards?
condo. Oh yes.
You just explained something.
It made it
Okay.
even more difficult for condo complexes. So I will try to not diatribe too much. From a lender's standpoint, condos are really fucking risky. It's riskier than a house, and everybody thinks it's super easy. When somebody wants to buy a condo, not only do we have like the money of the HOA, right, to add in, which means their buying power is less.
We're going to go back to that. Yeah.
But we also have an HOA that has to fill out forms, and we have a copy of that. We'll get that up later. The HOA has to fill out forms. They have to show reserves. They have to show that they have money set aside to pay out for lost claims like this. They have to give inspection standards. They have to tell us how many people have actually been paying their HOA dues, and any number of those how many people who live there live in the condo versus renting it out. All of these things can turn a condo from warrantable to non-warrantable. It changes the documentation status. I know I'm putting it all out there because there is so much to a condo. I just want people to know that it is not the fucking same as buying a house.
Right.
It's just not. And don't act like it is, because you might want it, but if your HOA company is failing miserably, nobody will allow you to finance that.
So
purchase.
let's just slow down and unpack this for the people who don't know anything about all the things you just said, because it was a lot. So conceptually, let's 10,000 foot view. I'm buying a house. I buy the house from the seller. I get what I get, and I'm good. Lender understands that the ownership and the thing that backs this loan is this house on this property. With a condo, I want to talk about the HOA piece in particular, because a thing that I think a lot of buyers don't realize is the HOA, one, has foreclosure rights on your property if you don't pay your dues in most cases. So you can't just not pay your dues. Like, they go in front of everybody else. So if you don't make that $230 or $280 a month payment, they can literally take your house. And, excuse me, if the HOA is poorly run, and I don't know if you can speak to specifics on this, but if the HOA is poorly run and you as the lender need those financials to show what the HOA is doing with the money, how much money they have to have in reserves, and there are measures that you're looking for, right? It's not just tell us how much you have and any answer will suffice. It has to be a certain, it has to fit inside the box. And a lot of times your homeowners association, it's volunteer run by people in the neighborhood who maybe have a stick up their ass, or maybe are busybodies, hypothetically, or they're full-time professionals doing other shit. So when Cassandra calls and says, I need this form filled out and I need this document, know that you're probably not a priority.
Yeah, I'm going to be getting it from Bill Green, who works full-time as a pharmacist, who does this as a volunteer position, and
out of his
fill out
AOL
all of that
email
shit whenever he feels like it.
Out of his AOL email account. Like, I see this all the time.
So
how do we get a hold of the HOA? I don't know.
Really think that the best part to sell any condo efficiently and quickly would be for the listing agent to send out an HOA questionnaire, or the owner of the current home sending out that HOA questionnaire to be filled out before the house is even listed. Because that way you can tell.
I did not know this was an option. I thought the lender had to be the one requesting that info. No. Oh, and by the way, they don't do it for free. There is a cost. Do. Yes, but it always blindsides people when there is a cost associated with it.
Yeah.
So let's dial this
if
back.
I owned my own home, so I will say, if I owned a home in a condo, I would feel like it is my right to have a copy of a form filled out for me for free, because I pay dues.
Yeah.
I would think the seller of the home would have that right to get those answers quickly and efficiently, which would help them in selling their home.
Many people don't realize that this documentation is being chased down on the back end.
They have no clue.
For years, I didn't. I just knew that the closings were taking longer. And, at the end, I would get asked, how do I contact the HOA? And this always kills me, because short of having that form filled out, which I didn't know I could do literally until just now, I would always provide the HOA contact info in my listing. So when somebody calls me and says, how do I contact the HOA? I'm like,
look at the listing.
Go look at the listing. It's right there. But
Well, you are a gem, because I cannot tell you how often I am trying to track down the legal, the property address, the name of the complex, and what HOA runs that complex in order to
that's
get
different.
a
That's a
document.
property management company. So you have the HOA, and then often you have an overlay of a property management company that's hired by the HOA to do
fill
all
out
of this,
forms.
fill out forms, make sure
Yeah.
dues are collected, all of that stuff. But I will tell you, often my sellers don't even know who to contact. They will give me contact information that they got when they bought the property. Guess what? What is his name? Joe Smith?
Bill Green.
Bill Green. He died. And it hasn't been Bill Green for 4 years. They just have no
It's
idea.
Bob Jones now.
Oh, yep.
Yep.
So, and there is no place to look it up. There's no national
no central
database
No.
or even statewide database for HOA contacts. It is, and sometimes HOAs dissolve. They just disappear. And you have to be able to prove all of these things. Anyway, I feel like we're really in the weeds. We're talking about condos. So the lender on a condo has to account for your dues, and that impacts your purchasing power. And then they have to get all of this documentation in order to find out if it's even financeable. You as the borrower may be fiscally sound and qualify in spades for this mortgage. But if the development is 50% rentals.
Can he bring up that document? He does have a copy of the document.
Yeah, can you bring that
So
up?
I did include this is the limited review condominium questionnaire from Fannie Mae.
There we go.
So
Okay.
what this document is some real basic questions that it says Fannie Mae. Freddie Mac asks the same things. FHA is a total different horse, just so you know.
Is it more questions or similar? Is there overlap?
It's FHA. It's more.
All right.
It's always
we'll set that
more.
aside because I do want to talk about warrantable because I think that's worth unpacking.
Yeah. So this is that was a limited review document. That is if somebody puts 10% or more down, right? That document gets filled out.
And notice that said limited. So if you're 10% or more, you get the fast track annoying document.
Which is still a lot of questions that have to be answered and could be answered wrong, which can disqualify.
So what condo
the product, the property for everybody, not just for you. It can disqualify it from anybody who wants a mortgage and it turns it into I guess I'm paying cash for this condominium.
How did you send that to me? I want to go. What are some of the questions that are on it?
I sent you it via text link. I sent you 3. So I sent her that form, the limited review form, which you can look up, Google limited condo review form.
Yeah, if you don't mind, I'm curious what some of the questions are because not everybody's watching. And what do they need to know? Yeah, zoom in a little bit more. Okay, question number 1. Are the unit owners in control of the HOA? Now, what does that mean, Cassandra?
So has the builder released control and the people who own the homes in the condominium in control of the HOA?
And what happens when you build, if I'm building a condo development and I'm building all of these units, I own it. And often in phases, I can release ownership to the people who own, like every owner of a property comprises ownership of the whole property. That's what makes it a condo. Like everybody in the neighborhood comes together and owns the neighborhood itself, basically.
Right. And
but
so
as it's being built, the builder owns it until it's done.
Right. And so I don't want to get into the weeds. Oftentimes the builder will build condos in phases.
Yes.
So there's phase 1 and then that's released to the owners. And phase 2 has to be released to the owners. But if you're talking about an established project, one that's been built for a while and not new construction, the answer to that is yes. It's been released. There's also, are the common elements and amenities complete, right? Is it a complete project? Yes.
Is the project complete and not subject to additional phasing?
Right. Yep. So oftentimes that one's no.
Why doesn't an HOA just have this document already completed on hand? For as many times as you know, and you and I both know they fill this out.
Yes, multiple times. However, sometimes the answers change. I mean, they could keep the same, but so he doesn't bring up page 2, but in page 2, there's some
I
more
have it.
stuff about, so what another one is they say,
Are there current or planned?
projects.
Oh, he's got page 2 up. Yep. Can you see
Yep.
it?
Yes. Are there assessments? Is there deferred maintenance? That deferred maintenance question is quite specifically tied to and a huge disqualifier after that disaster in Florida last year.
I have a deal right now where the HOA is refusing to answer this question. And I think I'm speculating wildly. The HOA is trying to avoid liability in case something bad does happen. They are literally flat out not answering the fucking question. So we can't close. Yeah. What?
I can send you the guidelines on what can be done if they have to answer that question, which basically turns into a cash requirement for any borrower, right?
Yeah.
Let's see. They're issuing temporary requirements that impact the eligibility of condos and co-ops. I'm trying to find the.
So I'm going into my thread with this particular deal. HOA is refusing to answer questions regarding deferred maintenance. Provide current reserve study, last 6 months of meeting minutes, and the past 5 years of engineering inspection reports, project review. This is from an underwriter trying to get shit from the HOA. My owner called the HOA. They're saying they did provide it, but they're not. I think they're not answering this question. And at this point, my most recent statement, and this is after much back and forth, and we've got this lovely game of telephone, right? We've got the underwriter talking to the lender, who's talking to the agent, who's talking to me, and I'm talking to my client, who then goes to the HOA. And we can't, I've attempted multiple times to just plug the fucking underwriter into the HOA, and it's not happening.
Well, they're typically not supposed to. The seller should say, oh, great, I'm glad you sent that to her. Can you please send me a copy of her review?
Maybe the owner can get a letter from the association president. That's where we're at on this right now.
So I just sent you a link which talks about what is acceptable if that question about deferred maintenance is answered in a certain way. So anyway, I didn't want to get. I
need to know where you sent it. Okay, I just
texted it.
We have many communication
later.
Channels.
Yeah. Osmosis, bitch. Can't you hear it? Can't you see the link in your head?
I wish. I can't wait for that. Yeah. I will be first in line for that shit. I promise you.
Bing. Anyway, so I'll try to get us back on track. I don't want to get into the weeds and go through every single specific thing that can disqualify a property, or what is required for a limited review versus a full review, or get into the loan level price adjusters on a condo just because it's a condo. I'm just going to suffice to say condos are far riskier for the lender too. Mm-hmm. They're far more documentation. They generally have worse rates. They require more down payment. And sometimes, even if you're like in on the condo, like Rachel's going through, might be like, nah, I'm not answering the questions. So it might turn into an all cash deal, which is one of the reasons that condos, there's very few. So there's something called an approved condo list. FHA has their approved condo list. Yes. VA has approved condo. Rural Development uses VA's condo list. Fannie Mae, Freddie Mac have approved condo lists. Okay.
So side item, who uses what lists and the requirements for those lists change often. Like it may be eligible today and not eligible tomorrow.
Well, there are expiration dates. So in the Fannie Mae approved condos in Michigan, there are.
And while she's looking at and counting, I will tell you that the HOA has to actively apply to get on this list. So it's literally the association has to go pay money and jump through hoops for the privilege of getting their development approved for this type of financing, which in certain circles is a less desirable type of financing for whatever chips people have on their shoulders about it. What I'm saying is many associations are not rushing to complete this.
They will not.
They are like, we don't want it anyway. Why would we pay for it and work so hard for it when we've got all of these other people willing to buy.
Yes. So I will say that for Fannie Mae and Freddie Mac, this is where I get into the spinning wheel of death. For Fannie Mae and Freddie Mac, there are 6 approved condominium developments in the entire state of Michigan.
Mm-hmm.
That's it. That's it. For FHA approved condominiums, okay, in the state of Michigan, it appears as though there are 131.
How many are expired?
Approved condominiums.
Okay.
Those are currently approved. So FHA started allowing spot approvals, which has really helped a lot of condos get approved. But Rachel, what kind of offers aren't getting accepted nowadays?
FHA and rural development right out the gate.
So I would posit that if you have a listing that is a condo, do yourself a favor, go onto the FHA website. If the condo is approved as FHA, accept FHA offers.
And
don't hold out for conventional for it to possibly fail that review. In this case, there's way more FHA that are approved.
And the fact that you are entertaining FHA financing would probably command a higher sale price because that buyer is more desperate and willing to pay more. I'm not kidding. That it's strategically, because you as the seller are taking on the risk of going through those FHA mortgage hoops, you're probably going to command a higher sale price. And the risk is incredibly mitigated if you're already on that list.
Yes. So FHA, they're already on the list. There's nothing they have to fill out. For FHA, you're on the list. You're good. You're good.
So,
3.5% down. Let's close it. I mean, the
'cause it's
property still has to appraise and
all the other hoops
repairs,
still exist.
But the condo complex itself and what that entails to get one reviewed and even getting the questionnaire filled out, it's already done for you. So if you're buying a condo, as counterintuitive as it may sound, if you can't pay cash, ask your lender, can you tell me if this is on the FHA list? Or as a listing agent or a buyer's agent, check if you qualify for conventional, you definitely qualify for FHA. It's not as good of a loan program, but oh boy, it's a nice solid backup. What's the name of your complex that you're having issues with, Rachel?
No, I'm not doing that. I want to go
All right,
back.
text it to me. I will.
I'm actually going to have to call you about it because I have an email chain. The agents sent me an email chain from the processor. I think I'm going to reach out directly and find out specifically what they need so that I can step in. What a really good agent is good at is being the heavy. I'm really good at throwing myself under the bus if you fuck up because I'm the buffer. I'm also the heavy. Anyway, I had mentioned earlier that what is on and off a list can change over time. And specifically, you and I did a deal on a condo in a development with a rural development loan that the development qualified for rural development. And a year and a half later, that client sold the condo and to another rural development borrower. And that loan got categorically denied by rural development because the complex suddenly was not viewed as approved. Something in the definitions shifted. And after that property closed 6 months later, the development was suddenly magically now viewed as approved again. So I shit you not, that shit changes constantly. So strike while the iron is hot. If you got it, fucking use it. So go ahead. Do you remember this? It's a very real thing.
I remember it. I absolutely remember it. So the one good part is that rural development uses FHA's list,
but for a while they didn't.
It will tell you when it expires. There's literally a set expiration date.
And you'll see them on there that have expired already. If your filter isn't tight enough, you'll see that
I have my filter for only
a month ago,
not expired ones. So
but if
you just want to go for If
you're on your own looking, just make sure it's still active because it will show up on a certain search result and will have expired 3 years ago. So another thing,
I send a link out to people a lot who are looking for condos. I just go, hey, these ones are already approved. If especially FHA buyers who want condos, it's a gigantic pain to get added to the list.
So anyway, there's something else I want to make sure we touch on that nobody explained to me when I was a new agent. And there's this term that gets thrown around in condo land that I think 98% of real estate agents don't know what it means. And it's the word warrantable. People talk about whether or not a condo is warrantable, and it has nothing to do with a warranty or a home warranty. That is common misconception number one with most of my buyers and sellers. Warrantable, and I could be wrong because it's been a long time since I've had this conversation with somebody, but in my mind, many real estate agents referred to a condo development as warrantable if and only if it shows up on the FHA approved list, and that's not the case. Warrantable is a term that is defined by the lender loaning the money and is subject to their definition of whether or not they'll loan on it.
Yes.
Is that accurate or at least close?
Yes. And
there is no checklist objectively that determine, you can't say, here's the definition of warrantable. Does this condo meet that criteria? That's going to work in every scenario.
No, it's very much kind
subjective.
of a flux of a lot of things, how they answer the questions. One of the biggest flags is how many people live in the homes that they own if it's an
rental
investor
percentage.
type. Yes. So like 50% of the people living there have to own it. They have to own it. Otherwise so if a bunch of investors come in and start buying units, say I'm the last person to buy it as my primary residence, right? And then all the next people who buy it in the next 2 years are investors. So the percentage of people who own and live in this condo starts going down, right? Like I still live there. I go to sell it. I bought it. It was a warrantable condo, right? It met all the terms. But now because there's so many investors, which is why I want to get out, right? I want to live with people who live there full time, and I hate that they're Airbnbs and and renters and shit like that, right? Or people's second homes, whatever. I go to sell it. It's no longer a warrantable condo because it's too investor heavy.
Yep.
And so generally speaking, so Rachel, I'm going to bring this all home. That's one of the biggest flags for warrantable, unwarrantable. What is the mortgage people will stop paying on first if shit goes sideways?
Their investment in second properties.
Yes.
The places they don't live.
Guess what people stop paying? The HOA, right?
Yep.
Guess what doesn't have enough funding to pay their insurance policies or make those repairs? The HOA.
So because the dues aren't being paid.
Say it's 51% investors and they stop paying because shit goes sideways. There's not getting HOA dues. The mortgages aren't getting paid, right? There's vacancies. There's delinquencies. Something goes wrong. The HOA isn't collecting dues from half of its people. They can't make the capital repairs, right?
Yep.
That's like an example of how condos are much riskier.
Yes. And so I Googled, because God bless Google, Fannie and Freddie use the term, Fannie Mae and Freddie Mac use the term warrantable. And I think any lender, this is subjective to each lender, use the term warrantable to describe condominium projects and properties against which they'll allow a mortgage. So there is you can't go into a real estate Facebook group and say, hey, is this condo warrantable? The answer depends on which person you're asking, because Cassandra could look at her shit and be like, no. And then you bring it to me and I look at my shit and I go, no. And then you go to our brother who looks at his shit and says, yes. It's like art. Is it beautiful? Fucking eye of the beholder. Kind of. It's just an analogy.
Yeah. Well, I would say that for Fannie and Freddie, any lender is going to have the same guidelines on the condo.
I was just making a point.
But yes, but there are lenders who lend on non-warrantable condos. Condo tells are totally different. But like if a condo's on the fence, if it's investor heavy and you're like, nah, they might fail that quiz and turn it into a non-warrantable condo, like I would send it somewhere else because they do non-warrantable. I had this like condos up in Lewiston on a golf course.
Mm-hmm. I think I won't say names. Nothing.
Okay. Anyway, I had to send 2 people away to my friend Dustin down the road because his company does non-warrantable condos. Typically a larger down payment's required. The interest rate is worse because it's even riskier. But
Because the bank
these
always gets
people-
paid.
Yes, these people qualified in spades on income. They had the money. They had, right, the assets. They had perfect credit. Everything is perfect. Fannie and Freddie were like, this condo complex, we will not lend on it, no matter who you use. So they needed a different type of mortgage in order to purchase that home.
I love
So
it.
yay condos.
Yay,
A little
condos.
tricky.
Little tricky.
It's not the
Trade-off is nice,
same.
though. You don't have to
Yeah.
shovel, in many cases, you don't have to shovel your own snow. You don't have to
Rake
deal
your
with.
own leaves.
Yeah.
Clean the gutters.
Nope.
Yeah.
So there are.
Roll the garbage to the curb.
Well, you do. You can actually get fined if your trash can is out for more than 12 hours. Like, it's ridiculous.
Well, sometimes they're in those big bins. That's what I was
yeah,
thinking.
Yeah, that's true. Anyway.
But yeah, it's
so
a
condos.
little different. And
So
we ask a
today's-
lot of stuff that people forget to ask.
So more hoops.
Or they don't. Yeah.
Go ahead. Yeah, more hoops. Cassandra's going to need more information. Your buying power might shift depending on some things. As in all things real estate, the bank always gets paid. It depends, and context matters, right? Those are our real estate goggles. I feel like we don't do this often enough. With the I took mine off.
I feel like I'm going to smear my glasses. I'm going to be so annoyed.
My glasses.
Oh,
All right, what else you
Dang
got?
it.
That's it for condos. Are we good?
I'm good on condos. They're super
right.
specific.
So next week, I'm going to just set this up since next week, Cassandra, I'm not even sure if you plan on being here. Is next week our interview with the smart home technology stuff? We're having a guest.
Said it is. Yeah.
It is. And I'm excited because I'm starting to become a late bloomer on technology, and I just Alexa'd my house like in the last 6 months. So I'm a little behind the curve, but I can see the value.
I really want to change my Alexa. I want to Alexa my house, but change it all. So I go, Alexis, and that's the only thing she replies to.
I bet
I want
you.
everybody to have to Moira her.
I bet you there's a way. Oh, we had other links.
Sure.
Should we mention what those are?
We
other
did
links.
put in links to the FHA approved condos. It goes
So if you're a
through the whole
listing agent,
country.
go grab it. Make it part of your
Yeah.
listing presentation.
And same thing to so FHA and Fannie Mae, Freddie Mac, the approved condo list. So
Yeah.
those are in there, and
So
there's
questionnaire.
also a link to the short form condo questionnaire.
Yeah, that's the one you should grab, the short form condo questionnaire.
Grab them all because 2 minutes of
Like
research
Pokemon.
before
Catch
you
'em all.
list it goes a long way in preventing what you're going through right now, sis.
Yeah. Yeah. Well, it's not an FHA mortgage. Oh, I see the questionnaire. Yeah, fucking A. I wish I'd known. The more you know.
Maybe that's what I'm saying. Maybe it is on the FHA. I knew I was going to be able to find this in time.
You're blurry. What is it? Garbage pail, kids. I can't see it. It's blurry. Oh, aw. I don't know if that's heartwarming or offensive. It says Rachel Rodent.
Yeah.
Yeah, you guys, it's the Rachel Garbage Pail Kid. I'm both offended and touched at the same time.
I love you.
I love you too.
See ya.
Bye.
The info given is current as of this recording, but remember, the market changes and real estate is hyper local.